Welcome to Reshair on ESPN 730. For the next hour, your host, Chris Reshair, will bring fresh air to your financial needs. Excite, educate, and empower you to make sound financial decisions. Chris is a seasoned licensed mortgage consultant with Movement Mortgage, equal housing lender, originator license number 117266. Now, here's your host, Chris Reshair.
Welcome back to Reshair Radio, folks. If you've never listened to Reshair Radio, this is your first time. We do appreciate you here today and want to tell you a little bit about the radio show that I run each and every week here in Charlotte. So Reshair was formed about two and a half years ago and was approached by a company called the Real Estate Radio Network, and they wanted to expand their network into the Charlotte market. They did a little bit of scouting and said, hey, we need somebody to do a radio show, Charlotte. And I said, great, let's talk about it. So anyway, Reshair really was designed to bring our listeners, that's you, some information each and every week related to real estate, finance, home appraisals, homeowners insurance, investing, whatever it might be, anything sort of finance related to our local market. And the goal is to bring in expert contributors and guests in each week so that you can have a good flavor for what's hot in the market, what's happening, what's new. And so that's really what it's about. I am a local loan officer here with a company called Movement Mortgage, who is really one of the city's largest lenders here in town. But really the goal is not necessarily to talk about mortgage every week. It's really to talk about lots of different financial pieces so that our listeners can step away each week and learn a little bit something new about investing or finance or mortgage or real estate. So really, really excited about another show for the week. If you haven't listened to us before in the past, I would encourage you to scoot out to my website, and that's the Reshair Radio website, which is reshairradio.com. Pretty simple, right? reshairradio.com. You can go out there, listen to today's show in its entirety, or you can go back and listen to other shows. So if you're thinking about buying a home or you want to learn more about investing, whatever, we have probably a good 20 shows going back out on my website. So anyway, great resource for you in the future, but let's kind of roll into what we're talking about today. So I do have to mention at the top of the hour that Movement Mortgage, the company that I work for as a licensed loan officer, that we are an equal housing lender, and my mortgage licensing number is 117266. Got to get those disclosures out. But nonetheless, let's roll into our topic, introduce our two expert contributor guests today. So first, I want to introduce or tell you about our first guest who will be on later in the segment. His name is Adam Kunda with National Credit Care. Adam's been on the show before. He's back each and every month, and we're going to be talking a little bit about credit repair and some of the things that you can do to strengthen your credit. And Adam will be joining us a little bit later during our fourth segment, so we'll get to him. But he is a licensed credit counselor with National Credit Care, one of the nation's largest credit repair company, and he definitely and his team will help you really analyze your credit and understand what the parts are to make your credit as strong as possible, and hopefully help you so that down the road, if you're ready to buy a home, buy a car, whatever it might be, you're more financially strong with a good credit score. So we'll talk to Adam here a little bit later. But let's also introduce our guest, Sandy Solomon with AXA Advisors. Sandy, welcome back to the show.
Hi, Chris. It's good to be back.
Yes. So, Sandy, you are an expert contributor. You've been on the show multiple times throughout the year, and you're constantly bringing great knowledge and depth to the financial industry and what our listeners can really benefit from. But before we sort of go into, what we're going to talk about later on today, we're really talking about financial literacy a little bit later in the show, and maybe how you stack up in terms of your smartness when it comes to financial literacy. It's going to be fun. But tell us a little bit about who you are and all that jazz, and kind of get us going so that we can our listeners can understand a little bit more about you and your background.
Sure. Be happy to. My firm would like me to offer our disclosure before we get started, if
Really?
That's okay. Yeah, I know you're not surprised. So it's important for our listeners to be reminded that the purpose of our time together is to educate and is not to provide specific tax or legal advice. Any of the examples that we use are strictly hypothetical and are not a guarantee of performance or an endorsement of any particular product. And our listeners should always seek the advice of a financial professional, a tax advisor, or an attorney about their specific personal situation. My firm is AXA Advisors, LLC, and the AXA Network. We're located in New York, New York, 212-314-4600 is our phone number, and we are members of FINRA and the SIPC.
Very good.
So
and
thank you.
I know a guy, if you're looking for a tax advisor or a financial planner, I don't know, there might even be one in the room here with us today. Thank you for that disclosure. Aren't you just excited to listen to the rest of the show, folks? I bet you are. So why don't you remind our audience a little bit about some of your core values as an advisor and a little bit about who you are, and then we'll sort of roll into our financial literacy theme a little bit later.
Perfect, Chris. Well, I am a chartered financial consultant and a chartered life underwriter with AXA, and the work that I do with our clients is focused primarily in three areas. We have a lot of clients that have young families. So with our young family clients, we assist in the creation of a financial plan, which is a process of analyzing the goals that they bring to us for things like funding their kids' college educations, maybe planning for the income needs of survivors, or in the case of a disability, possibly. And then also, my favorite thing to do is to work with people to help them with the ideas that are necessary for investing for their financial independence, and we might even advise them on a mid-range goal like saving for a vacation home, or possibly putting money aside to start a business.
Mortgage guys like vacation homes, by the way.
Yes. For our clients that are at or near retirement, closer to my age, we construct portfolios that produce predictable, sustainable, and dependable income so that money worries don't interfere with enjoying life later on. And then finally, a lot of our clients own small businesses, and for them, we help them with their employee benefit plans, their executive benefits, business succession strategies, and estate planning strategies.
Got it. Well, there's a lot in there we could actually break down. There's about 17 different shows, I think, Sandy, that we've got built into some of the things that you offer your
I have
clients.
material.
But I think the bottom line is what you're really saying is you're willing to help a lot of different people in a lot of different areas, whether they're young and getting started and need a plan, whether they're at the end of their planning phase and want to sustain their money, or even helping business professionals with proper planning to make sure their business are successful. That's really what you're talking about. Am I right?
That's correct. We welcome clients of all ages and all economic types.
Perfect. So if you're just tuning in, you're listening to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with Movement Mortgage. And we're in the studio here with Sandy Solomon from AXA Advisors. And if you have at any point have any questions, you can text them to me, or you actually need one of our services along the way and you'd like our help, all you need to do is shoot me a text at 704-277-4463. That's 704-277-4463. And all you need to say is, here's my question, Chris, for the day, or Sandy, please answer this question for me, or I need your services. Please connect with me at the beginning of the week. We will reach out to you after the show at the beginning of the week and maybe support you in whatever questions or services you may need. So I had sort of got our listeners going that we are going to be talking a little bit about financial literacy today, that being our show theme. And you've come up with a really, what I believe, kind of a fun topic really to discuss. So why don't you intro the topic that you really wanted to make sure our listeners were going to learn about today?
Perfect. Chris, I recently heard that FINRA, which is our regulatory body, the Financial Industry Regulatory Authority, decided to create a financial literacy quiz, and they posted that quiz on their website. So if the listeners were interested, they could actually go to FINRA, Google FINRA Financial Literacy Quiz.
FINRA.
That's correct.
Financial Literacy Quiz.
That's correct. And what we now know is that there have been a bunch of respondents that have taken the quiz, and according to FINRA, 61% of the respondents that took the quiz were unable to answer more than 3 of the 5 questions correctly. In other words, they got a 60%, which is not a passing score, unfortunately.
Yeah, that doesn't even pass in CMS.
No. So we found out very quickly there were a lot of folks that basic financial literacy seems to be a challenge for them. Only 37% of the quiz takers ranked high in financial literacy, meaning that they answered maybe 4 or 5 of the questions correctly. So FINRA concluded from the study that Americans demonstrate relatively low levels of financial literacy, and have difficulty applying financial decision-making skills in what they call real-life situations. So real-life situations with real-life money.
Right, and from what you and I discussed as we sort of planned the show, the questions really are not that difficult, and we're going to actually, a little bit later here, share one of the questions with you or like a sample that you'll see for yourself. So for our listeners today, I definitely would encourage you to get out to the FINRA site and really test your literacy. Are you financially smart or savvy in terms of these basic financial concepts? And Sandy really here today, aside from sort of getting you interested in this financial literacy quiz, we're going to talk about some basic concepts in financing so that by the end of the show, you're probably more likely to do a better job on that quiz. What do you think, Sandy?
That's exactly right. And I want the listeners to be reassured that the purpose of the quiz is not to make you feel stupid or dumb. It's to point out that a lot of people don't have a way of learning these principles and concepts in the traditional environment of our school system, and so they do come to people like me for answers to these questions.
You're right, and I think I've been there before. I've worked with a number of advisors over my tenure in my professional career, and there's not a lot that really goes on. I'm surprised even when I help mortgage clients how much they don't really know about the process that really you would think would be stuff taught in the school system today. And I think there's definitely an opportunity to teach basic financial concepts, including housing and finance and mortgage and things that people will credit, even understanding credit, right? That you just learn by life experiences, and sometimes you don't even get the experiences until much further down the road. So what we're going to do here, Sandy, is before we sort of jump in on this topic fully, is we're going to take a quick break. So again, we're talking about financial literacy. We've got that financial literacy quiz that we're going to encourage you to take, but we really want to talk more about those concepts and give you a little strength here today, help you feel a little smarter at the end of our segment. We've got 2 more segments on this topic, financial literacy, so please stay tuned. We're going to be right back.
Sports fans know that the key to winning the big game is going in prepared. Right now, houses are selling fast. So if you're in the market for a new home purchase, don't just be prepared, be Movement Mortgage prepared. Charlotte's leading mortgage lender, Chris Reshair at Movement Mortgage will tee you up with a free, fully underwritten, upfront pre-approval. Shop for the home of your dreams, already backed by an upfront pre-approval at Movement Mortgage. Call Chris today at 704-277-4463 or find Chris at www.themortgagegenius.com. Go into the game prepared with Chris Reshair of Movement Mortgage. Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshair, licensed loan officer with Movement Mortgage. And if you're just tuning in to our show today, we've got a couple of expert contributors in the studio with us today. Sandy Solomon from AXA Advisors and Adam Kunda from National Credit Care. And we're starting out here, kicking off our topic or our show here, talking about financial literacy and understanding whether or not you think, or we think, or whoever thinks, right? If FINRA thinks you're financially savvy. And Sandy, welcome back to the show. So before the break, we were really just introducing a concept of there are some basic financial questions that a lot of Americans maybe don't really understand about financial literacy, about financial topics. And Sandy was telling us a little bit about the quiz and how Americans maybe didn't perform as well as we thought. But I'd like for you to tell us, Sandy, in reference to the quiz that we were mentioning before the break, what kind of real life situations did the quiz really talk about in helping to understand really where people are financially, understanding financial concepts?
That's a great question, Chris. The examples that were given by FINRA of the people who did well on the test, meaning that they got 4 or 5 of the 5 questions correct, that those people were likely to display a lot higher financial literacy and more likely to have, for instance, a basic emergency savings fund, so they didn't need to borrow or take from their real long-term savings when money was needed for some unexpected expense like a car repair or home repair. They tended to plan ahead for things like home ownership, which I know is important.
Yep.
It's one of the fundamental building
dear
blocks.
to my heart. Sure.
Yes, it is. And also they planned ahead for retirement. They put money aside early in life for their retirement goals later. And they were also, and this is really key, I think, a lot less likely to engage in what FINRA called expensive credit card behaviors, meaning they turned to credit cards as a way of paying for even minor expenses or maybe vacations. So they were paying a lot of interest on consumer debt.
Ironically, Sandy, we're even seeing that in some cases with student loans.
Yes.
Where people are financing a lot of their life on a student loan. And then we wonder why they're coming out of school with a lot of debt, right? Burdened with a lot of debt. Now, I know higher education is not cheap today. But yeah, credit cards, student loans, whatever. So
and credit cards are so ubiquitous. They're so easy to get. And a lot of people fall into the trap early before they really form many financial habits at all. They form the habit of using credit, and then that can slowly but inevitably spiral and then maybe get out of control.
It just really puts them off track, or never really
Yes.
gets them on the right track from the beginning in terms of long-range planning. So anyway, why don't you give us an example? You had mentioned before the break that if you wanted to take the financial literacy quiz, you could go to FINRA, F-I-N-R-A, or Google just FINRA Financial Literacy Quiz, and you could take the quiz yourself. But why don't you give our listeners a quick example of some questions that are on the quiz?
Yeah, it's easy to find the quiz, and it's fun to take. I took it a couple of times. I can reveal to the listeners that I did score 100%
okay,
on
good.
the
That
basic.
was going to be my question, but I didn't want to throw you under the bus.
I did. I was proud of myself.
Well, you should be.
Yeah. There was even a 6th supplemental question that was a lot harder than the first 5, and I got that one right too. So,
well, there you go.
Yeah, you wouldn't
Folks,
have me on as an expert contributor
right,
if I
exactly.
couldn't pass
we
the
have
test.
The best expert contributors on the show here at Reshair
right.
Radio. So go ahead, shoot.
So my personal favorite example of a question that's on the quiz, and I'd love for the listeners maybe to even just jot this down, is suppose you had $100 in a savings account, Chris, and that savings account was earning 2% interest per year. So $100 in savings earning 2% interest. After 5 years, would you be likely to have A, more than $102, B, exactly $102, C, less than $102, or D, I don't know? So that's the question, is $100 for 5 years at 2%. What is your answer there? And I would hope that most everybody would know that you would have more than $102. Right, that's right. But apparently a lot of people didn't know that, and that's a cause for concern.
You should be earning $2 of interest a minimum per year.
That is correct, yes.
Obviously slightly more than that in subsequent years because your money is going to gain a little bit larger on 102 versus 100.
That is compound interest.
Exactly. So, all right, cool. So hopefully all of the Reshair Radio listeners are catching the correct answer on there. If not, then consider yourself educated now. So, all right. So with that information in mind, are there some basic financial concepts that you believe our listeners need to know about today?
Yeah, Chris, I definitely think so. And so I'm imagining that if I were able to teach a semester-long class to students of all types, maybe we could just call the class Personal Finance 101. I would want to start by covering some very basic things that we won't talk about on the show, like completing a household budget, how to balance a checkbook, and stuff like that. Those aren't terribly interesting topics for a radio show. So I think what I would definitely want my students to understand the first week of class would be understanding the difference of what is the difference between a stock and a bond.
Sure.
You know, everyone's probably heard those terms. What is a stock and what is a bond? But in my experience, most people, when asked, they really don't know what that means. And then I would also want to, in first week of class, educate people on those asset classes. That's what we call them, how to invest in stocks and bonds. But then what are the other asset classes? And I know one that's near and dear to your,
right?
Yeah, other types of asset classes. One that's near and dear to your heart is real estate. That's
right.
an asset class, and people can invest in that.
Yeah, perfect. So to start with bonds first, what is a bond?
Well, I'm glad you asked me that one first. That's the one that I think is most confusing and that people ask most frequently about. So a bond is actually just a loan. It's a loan from an investor, say you or me, to some entity, and that entity might be a corporation, the ABC company, or it might be a municipality like the city of Charlotte, or it might be the state of North Carolina or the federal government.
Because we hear about bonds for schools and we hear about all this, so I think that would be a municipality.
That's
right?
correct. Yeah,
okay.
Special purpose bonds. Maybe they're trying to build a railroad or a dam or something like that. So as an investor, I'm lending my money to this entity, whether it's a corporation or some government entity, and the reason that I would do that is, number one, is for the promise of getting my principal back in the future, but more importantly, for the promise of getting interest on that money. So that's how my money would grow, would be from the interest on that bond. And I hope that makes sense. So the interest on the bond is paid at a fixed rate. It's
Sure.
agreed upon at the beginning of the period.
The term, right.
And that fixed rate of interest is called a coupon. So
Okay.
you've heard that before.
Yep.
And so that at the end of the loan period, the borrower pays back my initial investment, and those bonds are commonly sold to investors in increments of $100 or increments of $1,000, and those are the par value. That's what they call the par value of a bond.
Cool. I had a grandmother who was liked to invest in bonds, and she would, even as a child, instead of giving me birthday presents, we would get savings bonds. And I thought that was the coolest thing. So literally, when I bought my first home, probably at like 22 or 23 years old, I cashed in a bunch of my savings bonds that I had for over in some case decades, saved from my grandmother, that started out very small, but accumulated a fixed rate of interest, and I then cashed in that for money to help with my down payment. It was pretty cool.
And you were in possession of the physical bond itself,
I did.
the actual certificate. Yes, those are awesome.
It was pretty cool. So all right, so generally low risk, but not a huge return, but considered safe, right? Considered safe. So how is that different from a stock?
Well, let me back up just a minute, because you said a couple of important things that I want to clear up for the listeners, and I'll use the example, probably the one that's most common that people hear about every day, and that's the example of the United States government 10-year treasury. That's what you're basically doing is you're lending your money to the U.S. government for 10 years, and that investment, there's little to no possibility that the federal government would ever default on the money that they owe you, meaning that you are going to get that money back in 10 years no matter what happens. And because of that element of security, the return of your principal, that bond would pay a lower rate of interest, typically, than, let's say, for instance, the bond of a corporation, maybe a corporation whose credit isn't as good as others. They would have to pay.
Just print money, right?
That's right. I was hoping you wouldn't mention that.
Sorry.
Yeah, corporations that print money are actually that's illegal.
Right. But the U.S. government can pull that trick out of the bag if they need to.
That's exactly right. But the rate of interest is always determined on the credit quality of the bond. So the greater the possibility of default, the higher the interest is in return for lending that money out.
Makes sense.
I hope that makes sense.
Makes sense to me. Hopefully our listeners are following along. So we've just got a minute or two before we take a break. So why don't you get us started on sharing with our listeners really the difference between the bond that you just described in really great detail and how that compares to a stock.
Okay, I can do that before the break. So a stock is very different from a bond. Let's give an example to the listeners. Let's say, Chris, you and I, we decide to own a business together, and we each own half, 50%. Okay? So we would incorporate, and then we would issue stock as evidence of our ownership. And so in this case, let's say that we have each one share of stock, and that we have that share in exchange for our initial investment in the corporation, which was maybe $100.
Okay.
So we have this company. We've invested $100 each. We have one share of stock each, and we're 50-50 partners. So that stock certificate is really just evidence of the fact that we own this business together and that we've created this entity where we are both going to share in the overall success of the business. So the profit the business makes, we get to split 50-50. All right, if that makes sense.
Yep.
If there were 4 shareholders, we would all get 25% of the profit. And then we would also hopefully share in the gains associated with the growth of the business, but we would also share in the risk associated with the business.
Sure, because a business is not always profitable.
That's correct. And so you could lose your $100 investment.
And you could too.
That's correct, yes. So if we were a bond instead of a stock, we would almost certainly get our $100 back, but there's risk associated with business ownership, and that's the main difference in stocks and bonds.
So, I mean, there's definitely greater potential for loss, but there's also greater potential for reward.
That is correct. Yeah. And one of the potentials for loss that needs to be understood is that if there ever were a time when that business was in trouble, maybe it was in receivership, the bondholders are going to get paid their money back before the stockholders. Regardless, that's correct. So they have first rights.
So as a general rule, the bond is usually considered a safer, more conservative investment because it's got some more guarantees or protections built into it.
That is correct.
Perfect. All right, we're going to take a quick break and come back with a continuing topic of financial wellness and really financial literacy, excuse me. And so we've got more to talk about. Again, you're listening to Reshair Radio. Stay tuned. We'll be right back. Hey, Chris Reshatar here from Reshair Radio with Movement Mortgage. Are you still sitting on a high interest rate mortgage loan? Are you thinking about consolidating, paying off some of those credit card debts, or maybe doing some home improvement? Now's the time to call because interest rates are still at a 40-year low. My number is 704-277-4463. That's 704-277-4463. I can also be found at themortgagegenius.com. Movement Mortgage is an equal housing lender and MLS license number 117266. This is Chris Reshatar, your host of Reshair Radio. As a mortgage professional, we interact with several industry-related professionals, and we see the good, the bad, and the ugly. When I have a choice to select a closing attorney either to purchase or do a refinance, I choose John Ringer with Hutchins Law Firm. He is a legal professional and he covers commercial and residential transactions. More than just a closing attorney, John wants to be your attorney for life. He can provide you insights you need to make accurate and informed legal decisions. As a Charlotte native, John has witnessed the tremendous growth and development of our city and region. As a part of Hutchins Law Firm with more than a quarter century of experience and 400 years of collective combined legal experience, they have what you're looking for. They have offices in Charlotte, Fayetteville, Wilmington, and Columbia, South Carolina. Please give John a call if you need an attorney, the right attorney, at 980-275-9810. That's 980-275-9810. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with Movement Mortgage, and we are here in the studio live this morning with Sandy Solomon with AXA Advisors. And Sandy has brought a fun topic today, financial literacy. We even had a little quiz earlier in the show that you can go to and Google just how financially savvy you are. But we were really just kind of, Sandy, as you were sort of introing the show and financial literacy, you were really just explaining some basic concepts of finance and some of the terms that you hear every day that sometimes our listeners may not fully understand. So we've gone through sort of understanding the difference between a bond and a stock. And as we took our last break, you were really sort of you were explaining to our listeners what a stock is. So as we sort of wrapped that up and took a break, why don't you sort of bring us back to your concept of the stock, and then maybe if we did own a business and we had stock in the business, what happens if the business does well? Well,
and that's what we hope for when we invest in stock, and that's a great question. So as the value of our business increases over time, then the value of our stock is also going to rise because the stock is evidence of a proportional ownership in this business. So we would also have the opportunity to receive some other benefits from owning the business, and those benefits are shared profits, which are called dividends.
Yep.
So if you're a stock owner, you may own a stock that pays regular dividends. They could even be paid out as frequently as every quarter or every year. And so
and for our listeners, a dividend is in addition to the growth that you gain on the value of the stock.
It most certainly is, yes.
Okay, just want to make sure they understand that. So your stock value can go up, and you can also receive dividends.
Just like you are an owner. This is a proportional ownership in the business, and so you have the rights to the value of the business as it increases and also a share of the profits.
Perfect. All right, cool. So anything else there in terms of how the business does well that we need to talk about before we roll into maybe understanding the term equity?
No, that's where we want to go next.
All right, perfect. So we use this term in my business a lot, equity. You can have equity in your home, which is the difference between what you owe and what the home value might be. But that term is thrown around a lot in the financial world as well. So as we talk about stocks, talk about bonds, and we're going through this concept today, you mentioned the word equity, and help our listeners understand what you mean by that.
Right. And equity is the other term that's used to describe stock ownership.
Okay.
And I think that's confusing because people are sometimes familiar with the concept of home equity, which is your net ownership interest in the real estate property. But we call stocks equity in the financial business, and we call bonds debt. So when you hear people talking about debt and equity, they're actually talking about stocks and bonds. That's exactly right.
And that's really interesting because you had mentioned earlier that the bond is borrowed money, right? It's
correct.
A loan, really. So that's why you call it debt.
Precisely. Yeah, or fixed income. So bonds are oftentimes referred to by any of those terms. They're interchangeable terms to financial advisors.
Right, and we wouldn't know that. Regular people.
Right. Not if you didn't pass
I'm just
the quiz.
assuming my listener, not if you didn't pass the financial literacy quiz. That's right. But this is really good because I don't think the general public really understands that. And even in my world, we throw terms around like loan to value, LTV and CLTV. And I know what that means. But a lot of times the customer's like, yeah, and they're shaking their head like they know what it means. And at the same time, they're sitting across the table from me and I know they don't know what I'm talking about. I try to make it make sense. So, all right. So tell us more a little bit about equity in the financial world and what that means for our listeners.
Yeah. And so this is what's most important about the class that I'm teaching. What's the difference between a stock and a bond? And the way that I would describe it to my students and to our listeners is like this, is which would you rather be? Would you rather be the owner or would you rather be the loaner? Would you rather be the person that owns the business, which is the stockholder, or would you rather be a lender to the business? And if you lend, it's true that you have the best chance of repayment because you're going to have first rights, but the yield on your investment will usually be modest.
Because it's fixed.
It's fixed, that's correct. And you'll never hear of a bond that's been issued that later on they call those bondholders and say, by the way, we've decided to pay you more. It never happens. It's not going to ever happen in the future. If you're the owner, yes, you could lose some or maybe even all of your money, but then again, if you're successful, you should always have a higher return. If you think about businesses that issue bonds, they are borrowing money from investors, and what are they doing with that money? They're reinvesting it in the business, and because they expect to make even more profit and they generate even more equity. So the loaner or the lender to the business, the bondholder, is always going to be in a reduced position in terms of the ability to earn a profit on your investments. So it's eminently true that investors are paid for the risk they take with the capital that they've invested over the long run. And if you take little risk, then typically you would get a low reward also.
Right. And I think if you bring that down to everyday world and everyday people, if you're at the end of your retirement phase and you don't really want to risk your portfolio, you may invest more money in a bond because it's a little safer, even though your reward will be smaller, right? That's why they kind of say as you age, you want to balance your portfolio and put less in riskier investments, maybe stocks, and do more conservative investing like bonds. And I'm not saying this is not advice to anybody that's listening in terms of how you should handle your money and portfolio, but more of an illustration of why someone sort of at the end of their retirement investment career may choose to invest more in bonds because it's guaranteed, it's safer, it's secure.
That's absolutely right. And I would add one last comment. It's incredibly important for investors to understand the concept of diversification, but it's way more important in the stock market than in the bond market. I think you would be fine as an investor if you didn't need a great yield to put all of your money in a 10-year treasury, but you would never put all of your money in the stock of one company.
Right. Absolutely. Makes sense. Perfect. So you mentioned earlier asset classes or asset investment types. What do you mean by that?
So the students would learn this is that there are all kinds of things that we can invest our money in, different types of financial assets, which we call asset classes. And the simple ones that everybody knows about, we got cash and cash equivalents like CDs. And then we've got bonds and stocks. And we've got your favorite topic, which is real estate.
Yep.
Both residential real estate and commercial real estate. Yep. And then we have precious metals like gold and silver. Yes, exactly.
Can't not watch TV with a few commercials on that.
Right. And even, a sub-asset class, which now is Bitcoin. That's considered an asset class.
Yeah, I'd like to have you talk about that topic sometime on our show. I think it's an intriguing topic that a lot of people just don't know enough about. But
I'll see if I can get permission.
Go ahead.
Yeah. And then lastly, the alternative asset classes that our students would learn about, things like stock options and derivatives and things like that are a little more complicated.
So basically what you're saying is financial products are really designed to allow people that want to invest their money or purchase these different kinds of classes. It allows them to really diversify in all these different types.
You hit the nail on the head. These are the ways that we use to allocate investments in a portfolio to create diversification.
Got it. And obviously, depending on what you invest in, you may have bigger returns versus smaller returns, some with guarantees and some not, right?
Potentially,
That's
yes.
the difference between the stock and the bond that we've been talking about here this morning.
That's correct.
Did I hit everything in that sort of topic area that you want to make sure our listeners hear about today?
If we have one more moment, I'd like to just mention one last idea in relation to this set of topics, and that is that financial products today are designed to allow investors to purchase these asset classes to have what I call easy access to these investments. And the way these investments are constructed, they show up in the form of funds today. So when someone comes in and they purchase a fund, they are purchasing a share of an underlying portfolio. And that fund invests directly in the individual securities and stocks and bonds. It's hard for a small investor to do it that way because they have the problems associated with selecting the securities and the trading costs associated with it, not the ability to perform a perfectly diversified portfolio, which adds unnecessary risk.
Got it. So there's a lot being said there, Sandy. So any other sort of general concepts here before we wrap up our show, just so that if our listeners need and want to utilize your services, how they would go about doing that?
Well, I know at the close of the show you'll offer the listeners my phone number or your phone number, and that's how they get in touch with us.
We can do that right now, actually.
Okay. So the listener could call my office directly at AXA Advisors here in Charlotte by calling 704-540-2962. And just for fun, I'd encourage the listeners to go to the FINRA website and take the financial literacy quiz.
And Google FINRA Financial Literacy Quiz.
That's correct,
Google,
yes.
Right?
And don't worry, if you don't score well, you can always give us a call.
That's right. So, all right, perfect. And Sandy, what an interesting topic. Very, very basic in nature in terms of really just helping our listener understand the difference between a stock and a bond. But you can see, really, that's really the goal of Reshair Radio is to help our listeners gain knowledge, gain power, and then take that knowledge and become financially sound as financially sound as possible within your own means. So if you need Sandy's services, I would definitely encourage you to give him a call. He would be happy to sit across the table from you and help you do a basic plan, a financial analysis, or if you're further in and are looking for a second opinion on how you have your funds invested, Sandy would be happy to talk with you as well. Sandy, give them your number one more time, if you would mind.
Certainly, Chris. It's Sandy Solomon, AXA Advisors, 704-540-2962.
Perfect. So I will just briefly jump in here as we danced around different topics like investments, real estate, home equity, etc. That's an area where I specialize. I've been a licensed loan officer, 16, 17. The years start to add up, and I start to lose track of how many years. Kind of like some of you probably lose track of what birthday is coming up next for you, right? So, but at the end of the day, I'm always looking for people that are thinking about investing in real estate, whether it's your first time buy, second home at the beach, in the mountains, whatever it might be. I'm licensed in multiple states. and or just maybe you're looking at investing in rental properties, which has really been kind of a hot thing in the Charlotte market. I've helped with people with all those kind of finances. In some cases, even for those that are seniors looking for a reverse or home equity conversion mortgage, they're one and the same. So lots of variety of loan products. So if you know anyone that may be of need of my services, my number is 704-277-4463. Again, it's 704-277-4463. So hopefully you have gained some knowledge here listening to Sandy Solomon and his expertise, stocks, bonds, financial literacy test, all that jazz. Stay tuned. We've got one more segment coming up with Adam Kunda, National Credit Care. Stay tuned. We'll be right back.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with Movement Mortgage. You've been listening to our show earlier. You've heard some great stuff about real estate, mortgage, finance, etc. But this segment, we're going to shift, and the wind's going to blow another direction, and we're going to talk about credit today. And we've got back repeat offender Adam Kunda with National Credit Care. Adam, welcome to the show.
Thanks, Chris, so much.
Repeat offender, you're supposed to laugh with me. Come on.
Couldn't come up with anything fast enough.
Yeah, I know. I don't know. But Adam has been an avid supporter and sponsor of Reshair Radio over the last year or so, and glad to have him back in the studio today. So, Adam, we have you on now and again to share different topics about credit, etc. But before we sort of get into our theme today, which is really going to be talking about major changes that are happening to the credit industry as of July this year, why don't you tell our listeners who you are and where you work and a little bit about National Credit Care?
Cool. Well, thanks. My name is Adam Kunda. I'm the Southeast Regional Manager for National Credit Care. And essentially, it's my goal every day when I wake up to help people understand the crazy FICO credit scoring system that we have here in this country. It's
really easy. That's an easy job.
You could say so.
No, I'm just teasing you, man. Like, I don't even know how the credit works hardly.
And that's why we work so well together. But yeah, so everybody comes to me. They're asking questions on how credit goes together. I help them answer those questions. And I'm also here to help alleviate maybe some negative items on the report that shouldn't be there. Things that maybe are our fathers or our brothers, or things that you might not expect to be on the report that we see every day. We're able to help clients clean that type of stuff up.
Awesome. So just in general, when somebody wants to use your service, how does that work?
So typically we need to pull a credit report. Obviously, we usually get that report from a licensed loan officer like yourself. And if I remember correctly, you are still charging $0 to pull a report?
We are.
Cool.
Yes.
So great. So, usually you run that analysis, let a client know if you can help them or not. And if not, they get sent my way. From there, we always want to start with a full analysis of the report so we can see what's in front of us, how long this is going to take. So I can essentially give a roadmap to a client specific to their situation. Is it something they're going to be able to get to the top? That's something that they need to tell me. I really only can take in clients who are willing and able to get through my program. So as they're doing so, we're prescribing positive credit information, as well as, again, trying to take some of this negative credit, removing it from the report.
Yeah, and sometimes it's just errors or duplicates.
Correct.
It doesn't necessarily mean you're trying to always delete something that's bad that happened.
That's
it could
correct.
Just things that really are wrong on the report. So,
Very
all right,
much
cool.
so.
So they can get a free analysis done through you at National Credit Care, and usually I'll connect my client to you. But where would they get a hold of you if they needed to use your services?
You can always email me, adam@nationalcreditcare.com, or a phone call is always good as well, 720-556-1959.
Say that all one more time.
Sure, adam@nationalcreditcare.com, and cell phone is 720-556-1959.
Perfect. Well, thank you for listening to that intro. I just want to make sure you know Adam is very credentialed. You've been with National Credit for how many years now?
6.5 years now.
Right. So you've been helping a lot of my clients over many years.
For sure.
So really today, the reason that I wanted to have the topic that we're talking about is recent changes that have happened to the way credit is being reported. I had a customer call me that really I didn't even have an application on, and she started asking me questions, and she said, I heard that my collections all now have to be taken off my credit report because of the new rule in July. And ironically, this is a consumer like off the street, right? I'm in the mortgage profession. I deal with credit every single day. And I'm going, okay, did I miss something? What is she talking about? And so I picked up the phone, Adam, and I called the credit provider. That is the company that Movement Mortgage uses to pull credit.
Sure.
You know, we have to get them through a service provider, and they then provide us the data from Equifax, TransUnion, and Experian. So I called the customer service line, and I said, hey, I don't remember the lady's name. Let's call her Judy. I said, Judy, I got this phone call, and this is what the customer said. And she said that, all these negative items, collections, and judgments, and all these things are supposed to no longer be reported on the credit report. I hadn't gotten any sort of information about this being true. And she said, there have been some changes, but I'm not even really sure. She said, do you mind if I check with my manager? And so I got the wonderful hold music, right?
Right.
Anyway, and she came back and she did share some updates, but really the reason that you're here as a regular sponsor of Reshair Radio, I want you to tell our listeners who are dealing with credit challenges now and again, what are these updates? How is it going to impact people? Is it a big deal? Is it not? And blah, blah, blah. So why don't you dive in, man? Help us out.
I got you. So I'm glad you didn't hear anything on the mortgage side, because the changes that you're indicating to maybe be true are not true. So what we have is about 2 years ago, we can rewind, the Attorney General up in New York actually kind of put his foot down, and he said there's a lot of things going on in this credit industry that I'm not too excited about. And one of the things that we were looking at was just judgments and tax liens and public records. So essentially what he has enacted is that the bureaus, as of July 1st, need to delete anything from their database that is not verifiable. Really crazy, the bureaus are only supposed to be accepting verifiable information. So they're going through and they're finding that they have tax liens and judgments stored on our identities that may not be ours.
Okay.
So, and you know this, you pull credit reports very frequently. A client sees something on the report that is not theirs. And again, I always thought this information was always accurate. It's not always accurate. That's why I have a job, is to help make it accurate. And the bureaus are essentially putting their hands up and saying we have inaccurate information. I think the general public...
But until the customer proves them wrong, it stands and stays on their report, Adam. That's the crappy part.
Yeah, we were saying before, the consumer's usually wrong and the creditor's usually right, and it's going to take a big act of Congress to try and get this removed from the report. And that's not the way that this should be. The consumer is most likely right if they say that they're right, and we see a lot of misinformation at the bureaus. Realistically, if you go back to 2013, the FTC did wrap up a study, and it was a 10-year study looking for errors on reports, and the number that they reported back was 40 million people had errors on their reports.
So it's just a small number of people.
Just a small number.
Absolutely.
Just a few mistakes here or there.
Okay.
But that's, again, why I have my job is to help make this much easier for the consumer, who, when the creditor is saying it's wrong, the creditor is saying it's right and the consumer is saying it's wrong, I'm there to help advocate for the consumer and give them the best chance at getting that removed from the report. So as the bureaus are going through and they're deleting these judgments and they're deleting these tax liens, we're not going to see many changes to the reports. There are some. What the numbers of at least our office is studying is saying that 2% of the reports nationwide will be adjusted by this change of information. And it's not a change in scoring. It's just a change in information that's in the bureau. And again, per the Fair Credit Reporting Act, we can only have 100% complete, accurate information in the system, and it has to be verifiable.
Wow. So really the change is not impacting medical collections.
No.
Right? It's not necessarily impacting charge-offs or liens that are accurate and true.
Correct.
That you as the consumer may have incurred as a result of you not paying your tax bill or federal income taxes or whatever it might be.
Right on the head, exactly. So we are looking at this saying...
So myth dispelled for mystery caller that called me last week, right?
That's correct.
Okay, so, and I really appreciate you sharing that, because I know this, we get these wires, these news wires that come out, and consumers, I have to admit, consumers are pretty savvy today, right? I mean, things pop up on, I get some Facebook news update. It's like, wait a second, Facebook's doing news now? I mean, like, we have information coming from everywhere. Like the gas station, I can't pump gas without some sort of commercial, blaring in my face and what the weather's going to be in San Diego tomorrow. So, we hear stuff constantly all over the place, and consumers are more educated, but I find that it's kind of like they're educated to a degree, right?
Yeah,
and there seems to be, especially in our own professional industries, and they're not in the industry, there's just sort of this lack of information or gap, if you will, that we're constantly having to fill now, because there's access to information, but they are only getting pieces of it.
For sure. And I hate to use these terms today, but bad news or fake news is out there as well.
Fake news, Reshair Radio caught with fake news.
For sure. So no, there's a lot of information I think that is disseminated through the news and through the media that might be on the horizon of being changed, but realistically in our country, Fannie and Freddie typically make the decision. So we can say all day long that a change is coming, but until Fannie and Freddie have actually accepted that change and put it into the scoring system, there's no change that we see. So if I was to go back and just look at the major algorithms, the whole algorithm as a full mathematical equation, the last time that changed was 2005. We haven't had a new algorithm release since 2005.
Right. So
for
we're
12
talking
years,
12 years ago.
Yeah, 12 years we have these little changes that are very, very small changes, but still there's no revamping of our entire system. So
perfect. So sort of wrapping up this segment, and Adam, it's been great to have you back again. Yeah. So at the end of the day, there were some recent changes in terms of how public records would be reported on a credit report, in terms of if they're inaccurate, they have to be removed, or if we don't have information that's being validated from the courthouse, whatever it might be,
correct,
then the consumer will be able to have that information deleted.
That's
and it's
correct.
Really protecting people who have inaccurate information related to tax liens or judgments that may be on their credit report.
Totally correct.
Again, small percent, doesn't happen to a lot of people, but there are a couple of people out there. It might be a small win. If we have a listener out there that's got his brother or his dad's tax lien showing up, we may have an opportunity to help you fix. So real quick, we got about a quick minute left here. Adam, how can our listeners get a hold of you if they need your services?
Sure. So if you have questions on tax liens or judgments or just any credit scoring question in general, always give me a call. Cell phone, 720-556-1959. If email is better for you, shoot me an email, adam@nationalcreditcare.com. We'll get you right to me.
It's great to have you back, Adam. And for our listeners that need that mortgage help, you can always find me on my website, themortgagegenius.com. That's 3 words, themortgagegenius.com. And you can listen to any show in its entirety at reshairradio.com. You listen to previous shows. We got all kinds of great information at Reshair Radio. So it's always great to have our listeners. Thank you each and every week for hearing us out on Sunday. It's not fake news. It's real news, Adam, right?
That is real, for
sure. And appreciate what you're doing. Have a great Sunday. We'll see you next week on Reshair Radio.
Thanks, Chris.
Sports fans know that the key to winning the big game is going in prepared. Right now, houses are selling fast. So if you're in the market for a new home purchase, don't just be prepared, be Movement Mortgage prepared. Charlotte's leading mortgage lender, Chris Reshair at Movement Mortgage, will tee you up with a free, fully underwritten, upfront pre-approval. Shop for the home of your dreams, already backed by an upfront pre-approval at Movement Mortgage. Call Chris today at 704-277-4463 or find Chris at www.themortgagegenius.com. Go into the game prepared with Chris Reshair of Movement Mortgage.
This is Chris Reshair, your host of Reshair Radio. As a mortgage professional, we interact with several industry-related professionals, and we see the good, the bad, and the ugly. When I have a choice to select a closing attorney either to purchase or do a refinance, I choose John Ringer with Hutchins Law Firm. He is a legal professional and he covers commercial and residential transactions. More than just a closing attorney, John wants to be your attorney for life. He can provide you insights you need to make accurate and informed legal decisions. As a Charlotte native, John has witnessed the tremendous growth and development of our city and region. As a part of Hutchins Law Firm with more than a quarter century of experience and 400 years of collective combined legal experience, they have what you're looking for. They have offices in Charlotte, Fayetteville, Wilmington, and Columbia, South Carolina. Please give John a call if you need an attorney, the right attorney, at 980-275-9810. That's 980-275-9810.
You've been listening to Reshair with Chris Reshatar, a seasoned licensed mortgage consultant with Movement Mortgage, equal housing lender. Originator license number 117266. Learn more online at themortgagegenius.com.